Are you confused about credit scores? Do you just want to know how do you improve yours? Well, stay tuned because today I'm telling you 5 key things that are going to clear up any confusion and help you improve your credit. If you want to get weekly tips on how to reduce stress around money and reach your financial goals, go ahead and subscribe to this channel and hit that notification bell so that you'll find out every time I post a new video. I can't tell you how exciting it was when my credit score finally went over the 800 mark. And so I've been watching it, and today I'm going to show you a little bit of a sneak peek inside my credit score and some of the things that have changed it, and then I'll talk to you all about how you can improve yours. Okay, so why does it matter anyway? Number 1, your credit score only matters if you're trying to borrow money. So if you do not need to take out a loan for anything, then you don't need to pay too much attention to your credit score, although I do know that some insurance companies will look at your credit as well in order to make decisions about whether or not to insure you for various things. But the thing that you want to understand is that if you are looking at purchasing something where you need to take out a loan, if you have a higher credit score, you're going to be offered better terms, which means lower interest. The reason that matters is because over the life of the loan, you're going to pay less money if you have a lower interest rate because of your high credit score. Okay, thing number 2, where do you get your credit score? Last week, I mentioned this video, and I'm going to put that right over here, all about credit reports. And what I mentioned is that one of my favorite places to go look at your credit score is through creditkarma.com. You can also find your credit score through any of the credit report bureaus, which is Equifax, Experian, and TransUnion. Sometimes they do charge for your score though. I'm going to give you a sneak peek behind the scenes in a minute to show you how I got their free trial for a week. Make sure you cancel it before you get charged, but then it gives you insight into all of your different credit scores, and there are many. Okay, so you might be wondering what type of score is used by banks. There's a lot of different credit scores, and there is something called the FICO score, and there's also Vantage scores, and there's a bunch of different models that are coming out. And in a little bit, I'm going to talk to you more about which scores may be used by which lenders, because it is always different. Here's a quick look at what I wanted to show you about different credit scores. So these are my scores that show up on Credit Karma, and it shows that it's the Vantage score, not a FICO score. So I do have a credit card that also allows me to take a look at my credit score. And when I did, it looks like this. So here's a FICO score, and it's showing as an 837. So that's somewhat of a difference, right, between like 819 to 837. And then I went online to annualcreditreport.com, and I got a 1-week trial subscription to a credit monitoring / score service. So when I did that, I grabbed all the scores and then I canceled that trial subscription. But so they were showing my FICO score also at 837, and that's a FICO score number 8. Now there's also a FICO score number 3 and a FICO bank card score 8. And so you can see 805, 833. These are very, very different scores. And that's also because different banks use different scores depending on what type of loans they're offering. You can also see that this score here, the 833, goes on a scale from 250 to 900, where most credit scores are on a model that's 300 to 850. The last one that they had was an auto score. So there were 2 different auto scores, again, pretty different, 813 and 830. And again, look at the scale. This is a 250 to 900 scale instead of the traditional, let me see if I can pull this up here, the traditional 300 to 850. So they are all a little bit different. That's why I like to use Credit Karma, because it is free. You get to see the updates as frequently as you're logging in, and it's a pretty good representation to just give you an idea of what your score is close to. Okay, now we're on to number 4. What makes up your credit score? So you're going to find that in your credit score, you've got 5 major components. It's payment history, how much you owe, which is referred to as your utilization, your length of credit history, the types of credit that you have, and how often are you requesting new credit. The most heavily weighted component of your credit score is your payment history. This makes up 35% of your credit score. Every month that you make a payment, it gets reported to the credit bureau as an on-time payment. If you miss a payment, it gets reported on your credit report as a 30-day late, 60 days, 90 days, or 120 days late. If you make a payment, say 10 days late on an account and your bank charges you a late fee, that's not going to report to your credit bureau. It's only after you've been 30 days late on a payment. Something to keep in mind also is that payment history that's negative can remain on your credit report for a number of years. The second most important component of your credit score is how much you owe, which is called utilization. This makes up 30% of your credit score. What utilization means is how much of your available credit are you using. This is primarily a factor when you have revolving credit cards, where you can pay down the balance and then charge again, pay it down, charge again. So keeping your utilization below 30% is ideal, but below 10%, you're going to see an increase of your score. Next up is the length of credit history. This accounts for 15% of your credit score. Essentially, what this is looking at is how long have you been borrowing money and showing responsibility in paying back debts. So what you want to keep in mind with credit history is that if you have several accounts and you close one that is your oldest account or that you've had open longer than other accounts, you might significantly impact your length of credit history based on how long you've had that oldest account. So keep that in mind if you are closing accounts as you pay them off, that will impact your score and bring it down. Okay, the last two components of your credit score both come in at 10% of the total score. So the first one is credit mix, and this is what types of credit do you have? So here it's going to look at, do you have revolving credit, like a credit card where you can pay it down and reuse it again? And do you also have installment loans? That would be things where you've been given a set amount of money and you slowly pay it back over time, like a mortgage, a car loan, or a student loan. Okay, last but not least is new credit. Have you been asking for more credit? And that's what we call a hard inquiry. Again, I talked about inquiries into your credit report in last week's video, and I'll link to that in the description below as well. But a hard inquiry is when you seek out a new loan or credit card from a company and they pull your credit. So if you have had a lot of inquiries where you're trying to get new credit cards, that might show up as a risk, because if you suddenly max out all those cards and then can't pay them back, that makes banks nervous. So that's why it matters. Another thing to keep in mind with inquiries, however, is that if you are shopping around for the best loan interest rates for a car or for a mortgage, you are allowed to ask a lot of people to pull your credit in order to give you the best offer. You have to do this in a very short amount of time, though. I would say within 2 weeks to a month. That way it only hits your credit as one inquiry. Okay, now we're on to number 5, and that's the most important, right? How do you improve your credit? So based on the things that I just told you and how they impact your score, there's a few things that you can do. Number 1, reduce the amount of times that you're asking somebody to give you new credit. Number 2, make all of your payments on time. Number 3, let's reverse the order of these so that they make more sense. Most importantly, number 1, make all your payments on time. Number 2, make sure that you're paying down your debt so that your utilization is below the 10% threshold. Sometimes when you've got utilization that's up over 80-90%, it's going to take a long time to get your credit score up because you've got to pay down those balances. So really work towards getting it down below 30% will be good, but 10% is going to be even better. Also, let's not go out looking for new credit all over town. Try to live on what you make and just work on paying down your debt. Another thing that you can do is called piggybacking on someone else's credit. So here's how that works. If I have, let's say, a young adult child that I want to help establish their credit, what I can do is I can put them on one of my credit cards as an authorized user. So the real danger here is that if you do actually issue them a credit card and let them have it, they can do whatever they want with it, and they are not legally responsible for that balance. You are as the credit account owner. But if you wanted to do this and just not give your child or spouse or significant other an actual credit card, you don't have to do that. But once they become an authorized user, that will start reporting to their credit report, so their credit score starts to increase so long as you're making all of your payments on time and keeping the utilization low. Before I go any farther, tell me, have you ever let anybody piggyback on your credit? I'm wondering if you let them also have a credit card. Tell me about it in the comments below. I'd love to hear about it. You also can do a lot of credit repair all on your own. If you ever see a mistake on your credit report, there are instructions generally on the credit report on how to dispute that. It's a pretty simple process, and then once the investigation is over, it gets removed from your credit report with no issues at all. Okay, I found this really great resource that I also wanted to point out. You can find this, the website's at the bottom here, consumer.ftc.gov, but it's all about how to help yourself through kind of a credit repair process. So it's just like a 16-page little book that will show you how to dispute and handle things on your credit report that you think should not be there. Okay, that wraps up 5 key things that you need to know about your credit scores. So if you have any questions for me that I didn't answer, leave them in the comments below. I will absolutely pop in there and answer your questions. Also, I'm going to stick a couple other videos here that I'm going to recommend that are also related to balance transfers and credit reports and credit scores. All right, I will see you next week. Bye.